Hey, I want you to understand that your business is not failing because people hate your brand. Sometimes the real issue is just very simple. Sometimes it's just that you don't understand your numbers. You are busy, you're posting, customers are buying, but somehow your money disappears. And that is because you do not understand the difference between revenue and growth rates. So, in this class, we are going to be looking at the numbers that business owners ignore and that makes it look like their business is dying. This is the business Masterclass Simplified edition. So this is the part one, and we'll be looking at differences between revenue and growth rate. So let's move to the class. So revenue is actually the total money that your business make, right? It's a very simple formula, just total money that you make, total sales that you make in your business part time. Say, for instance, you're into building, sell building materials, for instance, and 100 people buy 10,000 naira worth of building materials. It means 10,000 times 100 is 1 million. While that sounds impressive, the truth is revenue alone does not mean that your business is healthy. That is where most business owners make mistake. Revenue does not mean that your business is healthy, and it's again one of the things that investors would ask, whether it is investors, angel investors that want to give you grants, or the ones that want to give you capital or even loan. They know that revenue does not translate into a business being healthy, because the truth is that you could actually make a lot of revenue and your expenses is also crazy. For instance, you could have made 3 million in a month, and in the 3 million you've spent money on ads, you're spending money on rent, you're spending money on salary, you're spending money on packaging, you're spending money on fuel. you know Especially in this kind of country where we are in this part of the world where we don't have 24 hours power supply, right? So big revenue with crazy expenses is can actually destroy business, right? So now let's quickly move to what is growth rate. Growth rate. So growth rate is actually how fast your revenue is increasing. So for instance, say that what is last month, let's say you made 500k and this month you made 70k, right? Technically, if you look at it like that, you say that you made the difference is like 250k, right? But practically, to the formula for getting what your growth rate is to say that your current revenue minus your previous revenue. So your current revenue is 750k minus your previous revenue, which is 500k, divided by your previous revenue, which is 500k, times 100. If you do the math, you are going to get 50, which is 50%. So if you are being asked that what is your growth rate, what is your growth rate between last month and this month, you will say 50%. That is almost the same thing as if you are asked what is the difference between your growth rate for last year and this year. It means you are going to use the same formula. Your last year revenue, your this year revenue minus last year revenue divided by last year revenue times 100. Again, this year revenue minus last year revenue divided by last year revenue times 100, and then you get your growth rate. But now the truth is your business can actually be having 50% growth rate and yet your business is not healthy, like I have said. So for instance, let's say like last year you made 500k and this year you made say 750k. If for instance your expenses last year is like 200k, you made 500k, your expenses is 200k, it means your profit is actually 300k. But let's now say this year you are making 750k, which is more than what you made last year, but your expenses is around 600k. It really means that the business is not really growing, even though the growth rate might say 50%. The truth is, if you subtract your expenses, running costs, staffing, and the rest from it, and the profit is lesser than last year, it simply means that your business is not really growing. And that is why, as business and smart business owners, once you are monitoring every month, you should be monitoring your revenue, your growth rate, your expenses, your profit. Again, your revenue, that is how much you're making. Your growth rate, what is the difference between your last month revenue and this month revenue? Is it increasing or decreasing? And while you're doing that, you need to actually now um, consider what your expenses are. Did you spend more expenses last year compared to this year, last month compared to this month? And then in total, what is your profit? Because sales alone can deceive you. Until you remove your expenses from your revenue, you may likely not know what exactly your growth is. Now, as business owner, how do you monitor your revenue properly? The first thing you need to do is you need to do what we call tracking daily sales. You either track your sales daily or you track it monthly. But for me, I love tracking. I love it, and I would actually suggest that many people, um, business owners, track their sales daily or weekly at most. You can use notebook if the kind of sales that you're making is not much. You can use Excel, you can use Google Sheets, you can use your app or your POS. For instance, your bank account, if you have a business bank account, you can actually ask for bank statement, and from there you can check your income and your expenses, right? And after that, what you need to do is you need to compare your monthly revenue. Ask yourself, did you grow or did you reduce? And then watch patterns. Which month did you make the most revenue? What was the product that was bought most? Which product was bought most? Where did the customer come from? Right? If you monitor all this, you know the structure of your customers you should actually focus on, where your ad should go, right? Where your ad should go, where your focus should go, where the kinds of clients you should actually even concentrate more in terms of retention, client retention. So that is the end of our class for today. So your business does not grow because you're hardworking alone, right? It grows because you are able to understand your revenue, your growth, your expenses, and your profit, right? Because really, your feelings can lie, followers can lie, and grow in followers, but the truth is, your number will expose everything. Thanks for joining the class today. Remember to subscribe and like, and then you can comment, and you can also turn on your notification, because we're going to be having a lot of simplified business masterclass on this channel. My name is Michael Jacob, and I'm a certified life coach and a certified business strategist. Thank you.